let it fool you. Everything's gonna be alright.
Don't let it fool you.
Hello and welcome, everybody. We're back. After a week's long hiatus, this is Chart Request Live. We do this every Tuesday and Thursdays at 1 o'clock Eastern Time right here on Stock Market TV. I'm joined, as always, by my esteemed co-host and friend, Patrick Dunwillow of the Chart Report. How you doing, buddy?
I'm doing well. Can't complain.
So what
It's a
happened?
bull market.
Yeah, so let's talk about this bull market. I was gone. I wasn't really gone. I wasn't anywhere. But I was off the screens for a week. Is it still a bull market? Like, if I was just coming back here and I've looked at nothing since, the end of last week, what would you say to me?
I would say it's a bull market.
What chart, if there was one chart you would tell me to pull up?
RSP.
RSP.
Yeah.
Let's do that.
You
Let's talk
finally
about-
got the breakout last
Can
week.
I flip it to a line here?
There we go.
So this is the equal weight S&P 500. See it coming off the COVID lows. Great rally, right? People think we're frothy now. Remember what we did off the 2020 lows, right?
Right.
This is just a beautiful base. Like,
Yeah.
such a nice base. There's no other way to draw this than like this. Big old base, and look where we are. So it begs the question of, what do we do now, right? So I sold a little bit of Bitcoin today. So many indexes look like this or have looked like this.
Totally.
I mean,
And
what do you do?
let's not forget what happened with some of the major indices like S&P. That got rejected initially, and it had to build that little handle there first, right?
100%. So Pat's talking about this. We got close, right? Chop around a little bit, and I think the Qs are a better example now.
Yeah, I was gonna say, or maybe SMH even. Yeah, I forget. Qs
you're
might
right.
be.
Like something that ran in the summer of last year.
There you go, SMH. Yeah.
So these are your market leaders. So we ran right up to this overhead supply zone, right? This was the summer of last year. This is July. And we correct for 3 months to a place where people were doing this, right? Back then we were going like this.
Yes. There were
Maybe
a lot
not
of
us.
people posting failed breakout charts and stuff like that. And you know what? For a failed breakout, which it kind of was, I was surprised you didn't see more of a downside reaction to it. But that kind of speaks to the strength, right? In hindsight,
Yeah.
we can say that, but yeah.
The correction into the October lows was good enough. It reset sentiment. It scared a lot of bulls out. I got nervous.
Oh yeah. Oh yeah.
And then you got that automatic reaction higher. So I guess the question we're asking now is these
And-
indexes. Yeah.
In July, we were all saying, oh, it would be really healthy to have a pullback here. It'd be really healthy to have a pullback. And then flash forward, we get the pullback and we get the correction. And it was a very standard correction. At the October lows, everyone's losing their mind. Like, it's hard. It is really hard to, in the moment, do that because you're seeing all sorts of stuff out there, all sorts of bearish stuff. And it's a lot harder than when the market's hitting new highs and you feel enthusiastic about it and stuff like that.
I don't even think I've told you this. You're the quote guy, right? And we're going to jump into the request just in a minute here after I tell the story. But Patrick is a big quote guy. He does a great job. He's got a whole archive of quotes. I hung one in my office recently. I haven't sent you the photo yet. I have a quote right here. If I could pick one market quote that I think just sums everything up the best that I never want to forget and always look at, what do you think it would be? I'll give you a hint.
I'm very curious to hear this though.
Jesse Livermore.
Okay.
Any guesses? I know you know the Livermore quotes.
There's a time to be long, a time to be short, and a time to go
Time to
fishing.
go fish.
There we go.
No, that's not it. But that's
Wasn't
also,
it?
I mean, it's so good. The market is designed to fool the majority. Wake up every day and remind yourself of that, right?
Yeah.
Get to a logical level of overhead supply. Oh, of course we should sell. Guess what? Sometimes we blast right through it, right?
Yeah.
The market is here to fool you. That's why this is hard. This is why we like it so much.
Yeah, Walter Deemer has a very similar one that says the
Most
market
of the
will
people,
do.
most of the time.
Yeah, well, market will do whatever it has to do to embarrass the most amount of people to the greatest extent possible.
Right.
And you know, that kind of is why you need to always ask yourself, where's the pain trade? Where is the pain trade?
You know, asking myself all the time, is this pattern too clean? Is this too textbook? Is this too obvious? Right? Like, that's just the way you want to think as a market participant. But anyway,
yeah, absolutely. So let's get into it. Let's kick it off with CP.
So this is Canadian Pacific. This is the kind of pond that you want to be fishing in right now. We talk a lot about this industrial strength. Please go to the website right now, allstarcharts.com. Check out our industrial deep dive.
Oh, you had a great chart on the industrials yesterday too on Twitter there.
So industrials are up 18 of the last 19 weeks. I think that's the chart that you're referring to.
Yeah.
You just don't, this is just not a thing that happens, right? It speaks to the relentless bid. It speaks to the lack of sellers, right? It speaks to such an aggressive demand and upside momentum in this group. But also, if you dive into industrials and do any sort of internals analysis or an analysis of the market internals of industrials, which simply means looking through the different industry groups and subsectors of industrials, looking at the individual components of those subsectors. How do all these charts look? Because when you do that in technology, you find something that basically tells you breadth is not that great, right? It's the large caps, it's the mega caps, some of the mid caps, but the small caps are really speculative stuff within tech. Not really buying in. In industrials, you could find some micro cap industrial that
I was going to say it is the small caps.
Absolutely. So the broad participation within industrials continues to stand out. These are the true market generals of this cycle.
Real quick, could you pull up the small cap industrial relative to the S&P?
Yeah.
I know Austin Harrison shared a great chart last week, and he said, every time I look at this chart, I need to make sure that my scale is in log form still, because the thing has just gone nuts.
You want it relative?
Yeah.
I think you're talking about this one. PSCI versus IWM. Yeah, that's it.
Yeah, maybe that's, yeah.
So this is small cap and drug. Look at this thing. Small cap industrials versus the broader small cap index, right? And here's the thing. I mean, this is crazy, right?
Yeah.
I mean, talk about the generals. Also, it's not just small caps, right? So here is equal weight large cap industrials relative to the equal weight S&P 500. I mean, this is just the group that you have to be involved in right now, right? So look at this base going back to the financial crisis.
Wow. And let's not forget, this industrials have historically had the highest correlation to the S&P. So, you know, this is your best roadmap you got here.
So super bullish from a broader market perspective. 100%. All right, CP. So I like the rails here. Look, are there other things inside of the industrial complex that are stronger right now? Sure. Is there a potential massive catch-up trade in the rails? Yeah. So do you want to overthink exactly what pond you're fishing in within industrials? In other words, do you want to buy the waste management, the business support services, the railroads, right? I wouldn't overthink it. You want to buy the best charts that are outperforming their group. I think CP at this point is either one of them or going to become one of them. This thing ripped off of the COVID lows, just like a lot of industrials did. And then it's been straight sideways for going on 3 years now.
That thing took forever.
Yeah. This is May of 2021. January of 2021, when we entered this range between, and it's a tight range between what, 67 and 84. We're just now breaking out. This is 3 years of consolidation coming off a very strong uptrend. Very strong uptrend here. And why wouldn't we resolve higher in the direction of the underlying trend? It looks as though it's already happening. The next Fibonacci retracement gets you to about 123, which ain't bad.
No.
Yeah, we're talking about 50% here in one of the industry leaders within railroads. So yeah, green light for me. Above
You know,
850,
it seems like a lot of names with Canada in their names are breaking out. Did you see CNI? No, CNQ. Sorry.
you're talking about Canadian National
Yep.
Railroad, CNI. CNQ,
CNQ. Yeah.
CNQ is great too. This is same conversation as Exxon, Chevron, Conoco, right? This is one of the really one of the largest multinational integrated oil and gas plays that we have. And again, a big rip off the 2020 lows, straight sideways, consolidating for a couple of years. And now it looks like we're getting a resolution. These are some of the best patterns in the market right now. So yeah, green light to CP. CNI, Canadian National, probably needs a little bit more work. So CNI, I'll get excited above those 2022 highs, late 21, early 22 highs.
So let's move on to CYTK.
Cytokinetics.
This one was our biggest winner. We got long around 34 because of a failed Head and Shoulders top. And man, that's probably one of my favorite patterns now, the failed Head and Shoulders, because this one just, I mean, it was a huge move. I think it popped like 80% or something in a day.
Biotechs, huh?
Yeah, biotechs, man.
So here's how I would do this.
You see what I'm talking about, though? The failed Head and Shoulders there to the right?
Oh, hell yeah. I see it.
It just poked through the neckline and then reclaimed it real quick.
Patrick's talking about this little guy. And the funny thing about these, right, Pat?
Yeah, exactly.
So the funny thing about these is that, and I'll drop the long-term moving average in a second, but I really don't need to because I could tell by looking at the chart that at this point, when this pattern was forming here from August of 2021 until October of 2023, the primary trend was clearly higher. So the thing about potential tops or chart patterns that look like tops is the context of the underlying trend is so important. You never want to make the bet that something is a top, right? If it's in a really strong primary uptrend, it tends to be a failed top more often than not. When it actually is a top and you get that confirmation, go ahead, short the shit out of it, right?
Yeah.
That's great. But that's the lower probability outcome. We love talking about reversal patterns. What people don't understand is that when the trend is moving in one direction, it's always going to be the lower probability that it reverses. That's why we are trend followers, right? Because trends tend to persist, right? So when you look at something like this, you say, oh, this is top, this is top, this is top. You have to know in the back of your mind that is always going to be the lower probability outcome. The higher probability outcome is that it's this. It's not a top at all. It's a failed top. And we rip higher in the direction of the underlying trend. That's exactly what happened here. If you're buying here at this support zone, you're a savvy investor. Good for you. Right.
And Steve, this is exactly how the move in NVIDIA started, right? I mean, one of the most historic market moves we've seen in ages.
Yep.
And that's how it started, a failed top.
Yep.
Exactly how you're describing it.
So this one with Cytokinetics now, I think we're at the point here where, and goddamn, I mean, you got to go back to 2004 here.
Man, I didn't know that it just stopped right at those IPO highs and then just.
But also notice the psychological resistance here.
Oh, wow. Good point. Great point. Yeah.
It stopped at 100, like almost to the T, right?
That's a great point.
So I think for Cytokinetics, it looks great. This is a monster base that we have shaping up here. And I know we're at 67 right now, so this probably isn't going to help you on a trading basis. But this one, for me, is long above 100.
Yeah, I would wait for that too. But looks like it might have to do one more big pullback before it does complete that base.
Yeah.
You want to move on to Freshpet?
Mm-hmm.
Freshpet.
So I don't know what they do.
So they're like meal prep for dogs. Like they send you the food all prepackaged like that.
So
But yeah, this one has been a real popular one lately.
so this is for these pet freaks, right?
It's for the pet
Yeah.
freaks.
Which is fine, and I get those people, and I like those people. 'Cause
Listen, I'm kind of a pet freak. You're a little bit of a pet freak.
I'm a total pet freak. I love my pets, but I mean, my cats eat like fresh or smoked salmon on a regular basis because that's just kind of their thing. Tonight they'll probably get some oxtail. I don't need somebody to send me
Hey.
like meal prep. But yeah, I take good care of my cats. They eat great. They eat really well. One of them has an excellent palate. She loves the salmon. If I bring tuna into the house, it could be like a like live fish that I just caught. She's freaking out. She can smell it
Are
from a mile
you
away.
catching tuna like that on the reg?
A couple times.
Okay.
Almaco Jack. I caught an Almaco Jack recently, which tastes like tuna. And they fight even harder than the tuna, so that's cool.
Oh,
But
wow.
the other cat wants nothing to do with it. She just wants her food. So like they're all a little bit funky. So Fresh Pet here, I'm a Chewy fan, but I get it. Fresh Pet, you were high and tight coming out of the base. Like that, right? See this? See the base? So
Yeah.
I think like the trend is higher here, right? We have reversed. We could draw the reversal pattern. Boom. Beautiful. Lovely. So the reversal is in, the primary trend is now higher. With something like this, it's where do you buy it, right? Because
Right.
now we're in a range where I have the breakout level down here around 70, and then I have the old highs up here around 184. And how do you get in the meantime? Because
Right.
you're kind of in no man's land here.
Yeah.
Here's how you do it, right? You got the gap and go on the last earnings report. You play the short-term continuation patterns. And risk management is so important, right? So in other
Right.
words, you're only long here if this little coil resolves higher, maybe call it 115. You buy strength at 115. But if we violate, and I think the last line of support here would be the gap, intraday gap low around 103, you can't be involved at all.
Right.
Because this thing could all the way back to the breakout level would not surprise me at all. Or it keeps running, right? And you want to be long. And like I said, you set it here around 115, and then you get long, and you can make a great trade all the way back to this 184 level. But it comes down to these short-term continuation patterns, how they go. You just want to follow the same direction.
You're good at trading those short-term continuations like that.
So I have two favorite patterns, as you know, right? For my IRA or my long-term trading accounts, I'm buying primary or structural trend reversals, right? And I'm kind of like setting and forgetting for at least several years at a time. In my short-term trading accounts, it's the short-term continuation patterns that I'm hitting, right? And typically with short-dated call options, right? I'm literally buying breakouts of these coils and trading short-dated calls on them. And that's it. In my long-term account, I'm buying this Fresh Pet here on the base breakout, and then thinking I'll look back in a year or two, right, and monitor it that way. So they're very different, but both of these patterns are incredibly powerful. It's just a question of what is your time frame.
Absolutely, yeah. And I like that you kind of segment them like that and keep them separate.
Yeah.
So let's do CNI. I know. We did CP and we did CNQ, but let's do CNI. Like I said, man, three different Canadian names: Canadian National Railway, Canadian Pacific, and Canadian Natural Resources.
And then I'm going to do Canada in general. But here's the thing with this one. CP looks a lot better. And that's really it for me, right? It's
Do you
like,
think this is one of those things, kind of like when Ethan Allen started trending with Ethereum, because they both had ETH as their symbol? Do you think this is one of those things where one of them broke out and then just all of them broke out?
well, I mean, trading in sympathy to your peers is a very real thing, right?
Right, and I guess this one they have a lot more in common. Like fundamentally, they have stuff in common. Whereas Ethan Allen and Ethereum,
Yeah, totally.
no real link.
Look, here's the thing with these. You always want to ask yourself before you buy something, is there a better option? Right? Like opportunity cost should be one of those last check boxes that you check before you hit buy. In other words, hey, should I buy JP Morgan or does Wells Fargo look better right now? right? So should I buy Canadian National Railway? It looks good. And it probably breaks out eventually above these pivot highs from late 21 or early 22. Like we talked about, like 137. But right now we're at 129. And that breakout has not materialized yet. If you go look at its closest competitor that we just talked about, Canadian Pacific, it looks a little bit different, doesn't it?
And that one wore you out first before you got the breakout. You know, it really just took forever. There were so many times I've pulled up this chart in the last 2 years where I'm like, oh, this looks like it's going to go. And
This one
here,
consolidated for far longer, but it's going now, right? So if
Right.
if this is a matter of should I buy CNI, it's the answer is simple. It's no, you should buy CP. That's it.
I like it.
You see the difference, right? One is resolved its range, and the other one is looks close to resolving its range. That's it.
So we got two more to get through, and then I'm sorry that we're taking so long, guys. We'll get to the chat right after these two, but we gotta hit Wavy's next. SWX.
Feeling chatty today. So he likes the Southwestern gas. Carl Icahn, big Carl Icahn name.
Oh yeah?
Mm-hmm.
I know you're watching all the transactions. Has you been actively buying this one in the last couple years?
Last couple years, but not recently.
Oh, okay.
Mm. Yeah. Okay. So here's how we do this one. Where are we now? Where could we be going? This is the current cycle. Downtrend, broken. New uptrend seems to be very much underway. I would draw the breakout level right here. Got a cluster of support and resistance in the upper 60s. We're through it now. I think you get a nice yield on this guy too.
You know, I know it's not an ARK name, not related to ARK at all, but it kind of looks like that, right? Like kind of like that Y coffee and bottom.
No, yes and no, right? It's a late base. Call them late
Meaning what?
base. Like a lot of these patterns have already gone. A lot of stocks have already booked trend reversals.
Right.
So oil and gas is one area that really hasn't. The ARK, the speculative stuff, a lot of altcoins or shit coins, right? They're still in that basing process. So yeah, totally. I think the bigger point is that these are the patterns that we've been buying and the patterns that continue to reward us for buying.
Yeah.
So Southwest here, weakness back towards those upper 60s, the shelf of former resistance turned support around 68 all day. You could probably buy it here at 71 too and bet on these 2022 highs. You're going to get paid 3.5% as you go. I like energy right now. I think energy is a pond that we need to be fishing in, right? Energy's been like left for dead, forgotten about.
Yeah, and
The best sector.
coming into the week, it certainly looked like we were going to get a pretty meaningful breakout. We kind of gave some back yesterday, and looks like a little bit today too. But I agree with you. I think we shouldn't be sleeping on energy here. And if you go look at like a 3-year performance chart, it's just such a league of its own. Like it's energy and nothing else. I mean, we always talk about tech, but the last 3 years, it's been energy's world.
Thank you. It is such an important point. 2020, 2021, we all think about ARK stocks, IPO stocks, the froth, the cryptos, right? The real speculative stuff. It was energy. It was coal. It was uranium. It was oil and gas. These were your leaders. And then what happened? Like here's XLE. This is just large cap energy. They rip off of the 2020 lows. They go almost 4x in a little bit over a year. And then they go straight sideways for 2 years. Like this is, as a technician, this is what we dream about. A primary uptrend, years of consolidation. You want to err in the direction of the underlying trend, which is higher. These ranges are very likely to eventually resolve higher. And I think we need to be thinking about right now, what are the best vehicles? What do I want to be invested in? What's going to make me the most money in an environment where energy stops consolidating and enjoys a fresh leg higher? So Wavy drives me crazy sometimes with the midstream and the MLP stuff. But he's always asking the right questions. So thank you so
Yeah.
much. We love having you involved in the show.
And Steve, you call them ranges, but a lot of them are looking like almost like ascending triangles, and that's one of my favorite patterns, and also the most reliable patterns in terms of like success rate.
Yeah, but is it not a range?
No, it is. Yeah, totally. That too.
I'm with you. And you've been all over the ascending triangles, and they're everywhere in the energy space right now. Actually, let me do a quick thing, right? In energy, you have two moves that you can make right now. You can buy something that looks like Devon Energy, which was the best performer in the S&P 500 in 2020 or 21, or maybe both years.
Really?
And you can bet on like some sort of a scoop and score, right? And buy the lower bounds of the range. Actually, I think the old Apache APA is a better example of this. Oxy was a good example of this, right? So just as a trader, we have options, right? So here's Apache, right? Look at this potential not top. This is a Head and Shoulders. What if it's not, right? And we reverse off this level. Perfectly actionable right here. Buying the lower bounds of this range, right? Then
I like that one a lot. I haven't looked at that one.
because it's clean, right?
Yeah.
For other traders, there are other options, right? Where you want to buy the breakout and buy the upper bounds of these ranges. So here's Canadian Natural as an example of that, right? So there are different ways that we can do this, and different traders are more comfortable with different strategies. But I think you can set up some very sound trading strategies and trading plans, either buying the lower bounds or the upper bounds of some of these energy names right now.
I like it. Let's move on to Pfizer, and this is the last one, and then we'll hit some of the ones in the chat.
Yeah. God. It just
Raul just mentioned BWXT. Remember us talking about that one?
yeah, I'd like BWXT. Yeah.
It's had quite a last few days here. RSI is 91. Oh my gosh.
God. Yeah, this has been a favorite of ours over the years.
BWXT, you mean?
No, yeah. So let's do
Not
Pfizer.
Pfizer.
No, not Pfizer.
Yeah, just had to make that clear.
No, this is a disaster. Listen, if you're a long-term investor, buy it here at 26. Tight stop. These guys, I'm not even going to get into it, but they've really kind of screwed the pooch and blew it here. They completely diverted themselves from what they've always done and tried to become the vaccination leader in a world where we're facing pandemic after pandemic after pandemic. That's the bet that Pfizer made. And the chart reflects it. They've gone from 60 to 30. They've been cut in half. This used to be one of the most blue chip, market behemoths that it was basically traded like a staple.
I've said this before, so sorry if I sound like a broken record, but to me, Pfizer is such a good example of how hard it can be to trade the narrative and trade the fundamentals sometimes. Because if you had told me during the pandemic that this thing would have come out with the vaccine, and it would be cut in half like this a couple years later, wow. While the rest of the market just like took off, right?
Investing in healthcare tends to be a very different situation than investing in the broader market or in anything else, right? Where these companies literally have no incentive to do the best thing that they can do. Right? Like
Nvidia, super depressing.
Nvidia is changing the world right now, right? Doing the best things that they could do and just knowing that cash flows and earnings will fall into place if they do those things. In healthcare and particularly biotech, these guys have a very strange incentive structure where they have seen over the years, time and time again, and I've seen in my career and even when I was back in college and school, if you cure a disease, the market does not reward you, right? What do we want to buy? We want to buy subscription revenue stocks. We want to buy companies that can charge you over and over and over and over again for the same drug because they're not curing you. They're helping you get by, right? To cure something, you enter a very strange place, and I think Pfizer fell into that trap. Unfortunately, I'm not saying they weren't trying to do the right thing. I think they did make a big pandemic bet too, which is kind of like a dark bet to make, right? So I don't really feel bad for them. But at the end of the day, this chart is an absolute disaster. You cannot own it below 26. If you want to make the bet that this is Pfizer, This is one of America's like greatest brands, most blue chip stocks, quality stocks that we have. Buy it against 26, hope for some sort of mean reversion. I think you probably get it.
I was gonna say I would actually buy, like, I don't think it's the worst thing in the world to buy it with a tight stop, as you said. Right at these lows here, you're looking for an RSI divergence and a fail breakdown.
Yes. 100%.
But who knows if you'll get it, right? Like,
dude, you get a 6.4% dividend.
wow.
In this at what? 10-year lows? This is Pfizer. This used to be a Dow component, right?
Yeah.
No, I would not tell anybody not to buy this here, but boy, the chart does not look good.
And I will say, so the request was a 1-year hold.
That's a weird. For me, this is either like a couple weeks mean reversion trade or
like 10 years,
short below 26.
I like it. So we would get in trouble here if we didn't get to some of these in the chat. So let's definitely hit them real quick. Let's start off with Snow. Is it buying the dip? Question mark.
Yeah, so a little bit C-suite change up here. I don't think the market's really liking that. Was it the CFO or the CEO?
I'll have to look that up. One sec.
One of the big executives is out. The market hated that. Also, this is one of those stocks that came in with a very high valuation, right? These guys are probably going to be just fine.
Is one guy really worth that much in a market cap move like that? I mean, that seems like a lot.
Honestly, Pat, yes.
Yeah, could be, I guess.
There are people talk to I don't know, Eddie Elfenbein, right? Or some of our more fundamental friends. There's pretty much nothing that they're ranking or weighing with more emphasis than leadership.
Yeah, the management team.
Some of the best calls that we've made over the past few years, while yes, they were grounded in technicals and not fundamentals, we can look back now. I could say Coinbase. Wow, what a master operator Brian Armstrong is, right?
Uber.
We talked about in Spaces Day. He's been incredible, right? The leadership of that company is just so good. Uber, Dara Khosrowshahi or whatever, however you say that. One of the greatest CEOs of the past several years. Just absolutely incredible what he's done with the transformation of Uber. You could talk about DraftKings and what their leadership has done, right? Any of these really, really good growth stories tend to be backed by a leadership team or a management team that is just doing the right thing over and over and over again. If you look at the Magnificent Seven, we can literally call out name by name, whether it's Elon Musk, Tim Cook, Sergey Brin, right? Mark Zuckerberg. These guys just do the right thing over and over and over again. And I think it's so important. So Snowflake is one of these companies that's come out. This is a real business. It's got great fundamentals. Probably slow to start here because it came out with a really hot valuation on its IPO. And now we're back in the box. So something like Snowflake, you need this base breakout to be intact. And that's really valid, I would say, above 200. Yeah, 200 is really clean. We're back at 170 right now. Honestly, the way this thing looks right now is you might get a retest of the lower bounds. 111.
That would kind of invalidate the base a little bit, or at least mess it up. It would kind of like morph into a range.
Well, it'll become a long-term continuation pattern, right?
Yeah.
Resolves lower. I listen, fundamental hat on. I would be a buyer at the lower bounds of this range, probably not a seller. But I'd much rather be a buyer on strength above 200. But I like the fundamentals here. I think Snowflake's not going anywhere. This is going to be a
Rachel says it was the CEO and it replaced by an AI guy. That's interesting.
But
let's move on to Lynn. I saw a couple people mention that one.
Yeah. Lind?
Lynn, yeah. L-I-N.
So this is the largest. I mean, how crazy. Pat, remember when we were laughing about this? Remember this?
Oh, yeah. Oh, yeah.
Talk about tight, dude. Look at this.
Oh, man.
God. We got really funky here for a day. I don't know what happened. And this is not a small, this is not a
Imagine waking up the day after that. You're just like, what happened?
But the funnier thing is it's a $220 billion materials company. This is literally the largest materials company in the world.
You don't
yeah.
see stuff like that very often.
It's fine. I think the more important point is just zoom out on the chart, right?
Right.
You can't be doing all the wrong things to become the largest company or the largest stock in your sector. So Lind, if you zoom out, this is a secular leader up and to the right over the longest time frames. So does this one have my blessing? Yes, all day. Where do we get long is the question. Am I doing too much here?
I'm kind of curious what happened on that day. I'm gonna dig in while you do
It's
this.
like earnings or some shit. Yeah,
Yeah.
I don't know. All right, so I'm going to tighten this up with the weeklies. Here it is. We got 1, 2, 3, 4, 5 straight up weeks. At least we're going on. Let's get to this 261.8, right? Because we can draw this out really nicely. This is a sweet consolidation within the context of a very strong structural uptrend. Right, so first target hit, a little consolidation, this little funky stuff, a little retest. Now second target, let it chop around here, boom, boom, do its thing. And then maybe we blast off from there. But that's the way I'd be looking at this, right?
Yeah. I like that
rid of the
roadmap.
261, let it chop around just like it did at the 161 here, right? And then maybe strength above 470 with a target around 590.
The big thing with this one is just like long-term primary uptrend, right? And then where do you get in kind of thing.
And also material stocks suck. And this one looks really good while most of them look terrible. And this is a group that we would have to.
Didn't they just break out to all-time highs a couple weeks ago?
Lind?
Oh,
Yeah.
no.
Lind is, yeah. But
no, I meant materials.
We have to presume, right? If this is a strong and sustained bull market, that the groups that are not participating that much right now eventually participate. And then what do you want to do? Like, how would you express a bullish thesis on those groups that are maybe not participating at the group level right now that might start participating? You want to buy the strongest ones, the ones that have been participating. Lind is one of them, right? So I think once those rotational tailwinds finally move into the more commodity sensitive or highly cyclical groups like materials, this is the kind of name that you want to be super involved in. I think that probably takes a couple weeks, maybe even months. Well, right?
Yeah. Can we hit Adobe real quick? How many more do you want to get to?
Yeah, what a dog Adobe is.
Hasn't always been that way, but
no, this is
definitely recently just hasn't had the same oomph.
It's one of the great large cap tech companies.
It's kind of like a utility in a way, right? Like if you're a graphic designer, you have to have Photoshop and you're going to be paying for that thing almost like the rest of your life.
That's what's amazing about these tech companies, right? Is that they weren't always like, okay, Adobe is used more by our creative team than by us, right? By our content team. Back in the day, I was on Adobe all the time, every day, as an auditor, as a fund accountant, as a corporate accountant. We use Adobe for everything. They took that early success and they pivoted into becoming like the place to go for creative people, videographers, graphic designers, right? But they didn't start that way. But that's what these mega cap tech companies do so well. We talked about Google today. They take moonshots, right? They're good at one thing, and they know that one thing won't make them a market, superpower forever. So they know I got to figure out that next thing. So they take the cash flows that they generate from the last hit and they figure out the next hit. And that's what all of these tech companies continue to do, the best ones. So Adobe is just the reason the chart looks like this right now is because they're waiting on what is that next hit. And
I'm surprised. I know they were messing around with AI a little bit. Like the other day, Giancarlo was showing me that they have these like AI editing tools for Adobe Premiere.
Yeah. They're going to find it. They're going to find that next thing and the market will catch up, right? And the stock will look a lot better in the future, I think. For now, we have a reversal that's moving in the right direction. We have not taken out the prior cycle highs yet, which A lot of the best tech stocks have, but I think you got a very clear support level here at the 62% retracement, called 536, the pivot lows from just last month, right? And you could play that back towards those old prior cycle highs around 700. And that's a great trade. So I think this one's very actionable right here.
And Joe, who asked about Adobe here, he asked how you draw your fibs, and I think this is kind of an important one. You want to just real quick break down?
Yeah, I'll show you how to draw them. So this one is drawn from the weekly intraday highs and intraday lows.
So I usually start with the intraday highs and lows, and then if you really want to get into it, then you can also do one with the closing prices, and that'll give you a range, so you have some wiggle room for your profits.
Well, here's the thing: the fibs are not science, and Adobe is probably not the best example. I don't overthink my fibs at all. I never will. So what did I do here? This is Lind. A lot of people would say, well, you did this fib wrong. You should have, hold on. I drew it here, right?
Right.
Because there's a shelf of lows that we
Right. You're kind of doing the best fit line kind of thing.
Right.
Yeah.
Some people would say, no, it should look like this. Down to the absolute intraday low where almost no one transacted at, and there's little to no price memory there. And then up to the intraday highs on this blow off top from early 2022 where almost no one transacted at. And I'm not saying that's wrong. I'm just saying it might not be right, and this is not an exact science. So here's how that fib would look. And then you know how our charts actually look internally? They look like this. Complete mess, and we would never publish them this way. I'm lining up the best fit here. Do you see this? See how I have touches in early 2023? And then I have a shelf of support here at the lows. So now what I've done is I have a fib range, right? I drew one from the ultimate cycle high and ultimate cycle low, and then I drew another one from a logical resistance and a logical support zone. And now I can project them both out together and go like this, which is what I want to do, because we don't draw support and resistance with pencils. We draw them with crayons or markers, right? And then I can draw a big, thick rectangle, right? That is a polarity zone that agrees with both fibs. So the answer, how do you draw your fibs, is it depends. And there's no exact science, and you can draw them however you want. And also, fibs are not the most important thing to me. They work when you're at new all-time highs and you have no price memory. But if I have price memory, I'm paying a lot more attention to that than any Fibonacci.
Steve, why don't we get to one more and then we'll shut it down. Let's see. Joe here has asked a couple of times, or I'm sorry, Jack has asked about CrowdStrike, CRWD. That one's at an interesting spot here.
Oh, it's so good. CrowdStrike, Zscaler, Palo Alto. These stocks are just so good. Listen, I can't say enough good things about the cybersecurity space right now. If you don't have exposure, go get some. Find some. Figure it out. So what have I done here? Speaking of fibs, I fibbed it out from its, just post IPO highs in 2019 to its COVID lows. Where are we now? 423.6. What have we done during this new cycle? We had a nasty drawdown during 2022, and we have very much reversed it. Now we're gunning back at those old all-time highs, and it looks very much like we're about to take them out. This is one of those groups right now where, oh boy, it's been a tremendous leader, right? So if it were to digest or consolidate or correct a little bit, it shouldn't scare you out at all.
Man, you had one of those funky candles there too a few days ago.
Look at that. Well, no, so that was Palo Alto.
Oh, okay.
Palo Alto reported earnings, fell like 30%. All the other cyber stocks sold off in sympathy and then ripped higher. And now I was waiting for this. I was waiting for this because I wanted to buy them here. I didn't. And this is great. Look, down another 7% here today. Earnings coming up. Oh, earnings were today, so they didn't like them. Earnings once it came out. With something like this, let it settle, right? And this is your buy level. Call it 290, call it 295. Yeah, almost 300. That's the zone. So at
Yeah,
this
and like
point,
Steve, there's a negative reaction, but the fact that this level is still intact is something. We'll see where it closes, but that's something.
this chart's this is gonna be just fine. No, seriously, this is the industry leader. I mean, from a fundamental perspective, you can't find many more exciting stories in the market right now. CrowdStrike is absolutely killing it. Let this settle. Let it shake out. Maybe you get some downside through tomorrow.
Rachel says they're actually tonight. Interesting.
Oh, so it's selling off in anticipation.
Yeah, yeah.
Even better. Let this thing shake. Ideally, it takes out like the pivot lows from the Palo Alto report, right? And then you get some sort of rip or higher where you could buy on strength. That's the ideal situation. But just let it settle, right? No reason to do anything with this one now, especially if it's reporting tonight. Even if it reported this morning and this was the reaction, I would say don't touch it. Don't touch it. But it very much looks like it's 150 right now, Pat. Somebody knows something. This one's selling off in anticipation of maybe a disappointing report.
I know we said this was the last one, but
You just can't help yourself.
Eric in the chat has asked a couple times about NTLA. So if we could just hit that one, and then I promise
Tell you,
we're done after this.
You can search my Twitter handle and this ticker, and we've known each other for a long time. Trust me.
How's your relationship?
You'll find tweets going back to like 2016.
You guys on good terms?
Listen, I am a genomics bull.
You are. You always have been. I thought you were going to get your genome mapped a while ago. Are you still going to do that?
So me and JC have been talking for a long time about doing something really cool. He knows how bulled up I am on genomics. So we've been talking about doing like the 10x genomics, or probably something more legit. No offense, 10x. One of these real like genome tests, and then writing a bunch of research around it. Why do we think this is interesting? This is the future of healthcare, right? So if you are a growth investor and you're interested in healthcare or biotechs, these are the stocks you want to be buying, right? This is the pond you want to be fishing in. Somebody is going to do some great things. I'm sure a handful of companies are going to do some amazing things within the genomics or the DNA sequencing space. That's going to be like the next big, massive breakthrough in health tech. Is it going to be Intellia? I don't know. There are hundreds now of genomics stocks trying to be that company. And I think you want to continue to monitor the relative strength in this group and make this a pond that you want to continue to fish in. Because from a secular growth standpoint, I mean, there's not many more exciting megatrends going on right now. So low 30s, right? We have these just post-IPO highs from 2016, then again, 17, 18, 19. Right in the low 30s. Then we got a base shaping up right here, right? I just drew a silly little trend line showing some sort of change in character in terms of the primary trend. I think this is a scoop and score candidate. I mean, am I crazy? I know I'm biased.
No, I mean, it really needs to dig in here, though. Like you got the breakout a couple days ago, like a short-term breakout. Yeah. Really important level that it reclaimed there. And now it's kind of struggling to hold it. But.
So Pat's saying, I don't like it. This is some bullshit follow.
I mean, no, there's still some time. There's still time. Right. We got to let it dance, but
we got to hook this thing higher.
This thing better bust a move soon.
Yeah, I know. And I totally agree. Right. So on strength above those late 23 highs, call it 33 and a quarter all day. Right. But I think the bigger point here is these are the kinds of stocks that we want to be thinking about. And this is one of those like CRISPR family names, Intellia. Just buy this one, guys.
Oh, look at that right there. It's right at the AVWEB.
I'm very involved. I've been stalking this company for a long time. I really like what they're about. This is like the archive of genomics data, right? That's going to help fuel the next healthcare cycle in DNA sequencing. So CRISPR above 85. Got that long-term AVWAP from those old all-time highs in 2021 coming in as support right here today. This is one of my favorites in the biotech space right now.
I mean, it's at an interesting spot for sure. But I think we're going to leave it here. Mauricio, I'm sorry we didn't get to CDNS. Dante, I'm sorry we didn't get to GoDaddy. A couple others that we didn't get to, but join us again on Thursday and we'll try our best to.
Yeah. Meet us here Thursday, 1 o'clock Eastern time on Stock Market TV.
Is this not the best power hour?
I mean, it's probably the best show that we do, right? Because we're all in our own worlds, and I'm thinking about financials or energy stocks today, but everybody else is thinking about their own stocks and their own portfolio. And we get here, and everybody shares their ideas and the tickers that they're interested in, and we just shoot the shit about it. So, I don't think I have a better 2 hours of my week than doing this every Tuesday and Thursday, to be honest.
It's a good exercise, you know. And we got the third man here, which is the audience. They're helping out too.
And we need him. Pat's going to be on the charts on Thursday, so we're all really excited for that. In the meantime, everybody tune in and join us every morning, 8:30 Eastern time, right here on Stock Market TV for the morning show, the best morning show in finance. Until then, we'll see you guys on Thursday.
Later. Thank you guys.